Had a little change of weather there very quickly this morning. NASDAQ futures took a U-turn in pre-market. So we had quite a nice little bump an hour ago. They were outperforming the NASDAQ over SPX, and now we had a little bit of a dump on the ADP miss. And then it kind of picked up a little bit. So we'll see if this fragility of chop continues. So that's kind of my market thought in a nutshell. All right, macro thought is going to be more around the lines of this bond sell-off and what it means to the Fed. And by that, I mean TLT is just not looking pretty healthy. If it drops at 40 and stays below, we'll see. Right now, the word on the street, meaning Bernard, who spoke yesterday and featured in Market Watch, and I did post that article because I was very interested in it. Yield curve control, Operation Twist, yield curve control, whatever you want to call it. I got called out for being a boomer for calling it twist. Them fighting words, my mother is, I'm not. Anyway, point is, we're going to have some type of stabilization. The Fed's going to step in, most likely. Australia just did recently on Sunday night. So, looks like they might be buying the long end and selling the short. Who the heck knows what they're going to actually do, but what they announce they do through these Fed speakers is very helpful in kind of stabilizing the market as well. And fixed income doesn't necessarily turn on a dime, but bonds make a lot of, let's just say the weather. At 60-40, well, there's 40%, so they say. Anyway, the point is it's doing damage right now in sentiment, and we'll see when Fed actually wants to come in. And then, of course, the futures turned, although it looked like it was going to anyway today. Can I just tell you? You saw what happened yesterday. We could not get anywhere, right? So this went completely negative, but it's still big picture sideways chop. So that's all I got. Sideways chop, not a lot of excitement here, sideways chop. So internals were nasty yesterday as it related to weak sticky movements. That was already, I didn't like the tape. Oh, but one rocket play, which I did not pay enough attention to, and I apologize. I had it for Monday and I had it for Tuesday, but nowhere in my fantasy thinking could I have come up with what it did. So it kind of turned into a meme stock. It also had nice short interest. It also had a phenomenal beat, and there you have it. It just, I know it, right? So I know some clients were positioned for it and didn't know it was going to go this high. Neither did I. So just to kind of review this real quick, my sentiment was this wedge, as long as it got above it, which it did, not on this week, but on this week, it was a fabulous open, and it stayed above that 2240. That was the, get out kind of thing. Then it just opened up at 2684, and I think I gave a price target of 30. Yeah, that was it. I had 30 because usually things don't rocket up 80% on an EPS beat, just saying. But this became the meme stock, a short interest stock. So the only way, in my humble opinion, to play this kind of thing, if you're long, is to bring it down to a 15-minute and kind of ignore this stuff. Let me just do this right here. All that pre-market messiness. And you can see what it did. It was in a squeeze. It popped up, right? That was continuation. Gorgeous. So here, first of all, that was the first Monday. And I said that looked gorgeous. This is the second. That looked gorgeous. Well, this is the third. Oh my God, gorgeous. But if you bring it onto a 15, here's the price target. And if it gets above, it's obviously higher. So another way of doing it, if you really, really, really are excited, go right down to a 5-minute. Now, this was picture perfect textbook, if you will, because it was a squeeze on any time frame. Weekly, daily, 15-minute, 5-minute, I don't care what. It was amazing because it was a squeeze on any time frame, which if I had paid more attention to it, I would have noticed because it's very, very rare. In any case, it had this 5-minute, and you can just see the 7 and 17 I still keep as an intraday tell, right? And then you had this pullback to the 7 and 17. What did I say about this intraday, whether it's a 5-minute or an hourly? This is very helpful. Typically, the first time it tags, second time it breaks. Remember that? So for day trading. Now you can't see in this mess because of all this pre-market distortion, but it will be removed. In any case, that's one way to trade this when you have a blue sky type of event. That was just bullish, 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 pulled back to the 7, broke out, bullish. Pulled back shallow, bullish. Now, as soon as it gets extended, that's where it becomes, quote unquote, an outlier that reverts. Expect a reversion move. So you could do that on a 5-minute. You could do that on a 15-minute. That is absolutely for chasing. But notice that happened well after I closed my trading room, so at 1 o'clock. All right, so we'll see what it does today. We'll put that back on an hourly. So this is the distortion that makes it really tough. So it looks very much like it's headed back to that 33 area. But yeah, no, had no idea this puppy would go almost to $50. That's just insane. And we had, success on Monday. We had success on this, yesterday. We'll see what today brings. Just a little review on some stuff that I populated in Slack. Boeing still looks fine. I don't think it's going to turn into a meme stock. Amazon did say they bought 11 used Boeing planes instead of renting them. And cargo business has been very, very, very robust. So they've converted passenger planes into cargo. They've been making some money, and providers. DraftKings was another idea. Well, it's been a swing for a while. There were two that were new, which was the Rocket, and I've already forgotten the other one. Doesn't matter. DraftKings also popped up, looked like it was going to kind of quiet, but this is still a gorgeous swing trade, and it has this habit of kind of like coming back literally 40%, 40%, 40%, and then taking off again. So no question, this one is a great new issue. All that speculation, Barstool Sports and blah, blah, blah. He's now doing a Buzz ETF. That's hysterical. All right, so this is still in play. And Etsy was another one that's been in swing mode for a while. And this is trying to get above 239. We'll see. I don't like that on a weekly. This looks fabulous on a weekly, but we can also negate this whole candle. So we had a great breakout and then a softening. Now we got to see if we can get back and close above 239. We got some bullish bent. All right, so the Qs are down about 0.5% this morning, and that's not a surprise. Look at this. It is a bearish engulfing. Now, what would have been a surprise is if it was up, honestly, because that is such a bearish engulfing candle. I still, you know how I feel about this, gap down. All right, so Rocket is one. In Slack, I liked this quote yesterday, so I added it in by Spot Gamma, which was last night, and I totally 100% agree. I don't know what the V is. The bottom line is that positive gamma refuses to materially build around current SPX price levels, right, which is at 39.50 to 4,000. And that positive gamma that does exist requires a push up into 39.50. As markets can't seem to hold the light resistance over 3,900, we are growing quite concerned that markets are increasingly susceptible to a sucker punch. So I called it fragility of chop, right? I still think that's potential. Oil short last week, intonated I was going to go into this short oil thesis toward the end of the week. Well, we already started to sell off from Thursday night into yesterday morning. We had a 7% pullback already in crude, but not the energy plays. OPEC did announce, increasing production, which would likely, push this lower. And I still think this is going to be a theme, if you will. But right now it's kind of curious because I made this little trend line, right? We're bouncing on the trend line, channel and moving average. I think we bounce, which is, by the way, today we have a little bounce. And then I think we're going to roll over. So that's my prediction. We'll see if that comes true. At the same time, CTAs are all in. I grabbed this from the market ear. Yep, that was kind of interesting. And Goldman, says the super cycle starts now in commodities, which is after this has already, come up 100 points from the lows. Anyway, it appears the market is going nowhere fast, my saying in my trading room. And there are some, freak of nature stocks like Groupon and Rocket. Let's try and find another one today. I just still think there's not a lot to hold on to this week. Tesla looks terrible. Yep. So Nvidia is still a better short than a long. I keep saying that this morning. Nordstrom, Macy's is still flat. I mean, we're not talking anything exciting here. Biggest excitement is this right here. I like if this is going to be a continuation, it's going to stay below that key level. Otherwise, this is just so fragmented. It's going to be resistance level 3 is an overshoot in the opposite direction before it spikes higher. So all it's done right now is filled the gap. It's on all it's done is filled the gap. Let's see. For me, this is a bounce and it will be a strong one, or we're going back down. Nasty look all right, well, let's see what it does. 139 is now the level. It just did a gap fill. We're still sideways. Look, that is a nothing look. This is gorgeous. I mean, as far as a chart pattern, bearish engulfing down below the 55. Totally weak sauce. That is just how I put it. It is totally weak sauce. But JNK and HYG have not fallen apart. However, they are below the 55. Again, that's not a good place to be. New week, new high is still, just sideways, right? This was the down. And now here we go. Monday, Tuesday, Wednesday, sideways chop. Although I got to tell you that dollar Chinese yuan looks very bullish, which would be bullish the dollar, but it has not triggered inside yet. The yen keeps falling. Oh, nice. Volatility of NASDAQ is, watch the 31.17 level. That could ignite some excitement. 31.17 in FXN. So the 10-year, let's talk about where they might do that yield curve control. They won't probably let it get above 2%, but they'll probably let it get to 2%. That's where we were before the COVID drop off. So that's where I think we're going. Yeah, I didn't put that. So the yield curve control, we'll talk about that more tomorrow with Juliet at 1 o'clock. Because she's the macro maven on this whole space and I want to get her thoughts. But my thoughts are we're going to go back up to the COVID 10-year, which is basically 2. And then I think they're going to stick the landing and not let us move very much around that stock. It doesn't have anywhere near the options flow. Okay, watch VXN right now. As I mentioned, this is what needs to be watched, I think, this morning. SQQ would probably be a good hedge. Yeah. Needs to get right. This is nice. Let's see. I don't play SQQQ. I mean, I don't see anything wrong with it, but for me, this is the absolute trigger. 1452, then I can run to 22. Gorgeous. Yeah, can't hold it. It's heading back down to this trend line. Weak sauce. Weak sauce. That's all I got right now, but it can change. We don't even have 15 minutes in here. But right now, tech looks like the risk off short. So absolutely, it depends on your time frame, right? So everyone has a totally different thing. Even this Apple thing, right? So let's just go here. This is the trend line break, right? So right here, I expected it to go lower. So let's say you put a 3-month put or put spread on this, lots of time. You needed that because look how much there was nothing going on for this week or this week. Then it broke. Then it broke some more. Now it's bouncing. Not a surprise, right? It's bouncing after it tagged my 127.5, tagged my price target of 120.50, which I had in Slack as my price target, right? So this is gorgeous. This is the H pattern that I absolutely saw. Now that's a bounce, but that's a counter trend bounce. I still think this is going to go lower. And I do have 106 in Slack as well. Having said that, it depends on your time frame. So if you have like 3-month options, you're fine. And you also know where you can cut lot. In other words, cut it. I'm wrong if this goes back above 129. And then I'm really wrong if it goes back above 135. And then we're in a new bull market if it gets above 144.50. So I just used this channel, overshot, got above, right? There's the trend line that's right here. Then it really tagged my price target, went right back up. But I'm looking at the market actively going, it's weak sauce. I don't really trust it. We're going to go choppy. And we're just still right here. This is the 100. We really haven't made up too much movement. This is a theta decay killer. So if you have anything short duration, you got to really watch your options and your time. But I still see this as lower. Not sure we're going to have anything really big fall apart because we are just in this choppy channel. I mean, we shot up in November and we've just been grinding slowly. Okay, got down to 55 and now we have this nice roundabout, right? Popped up, still a lower low. I mean, lower high. 55, 2 levels of support, 2.5 standard deviation move on the day, boom, right back up. And now we're coming back down. It's not very exciting as a speed move. Nowhere near as exciting as the bond break. I mean, that was just pummel, pummel, pummel. We finally came into some kind of support. We bounced bigly because it was a standard deviation move, but we're still in a trend lower. So time frames matter. There's a chase time frame, which is in this case, or Apple, a counter trend bounce, right? So yesterday I said, okay, this looks like it's going to go to 126 and to hit 128. But the point is, counter trend is short, and you can even go on a 15-minute if you want. I'm not so fond of that. And my scans to see what we have for action. All right, so this is definitely a gap down, a bounce into resistance, and now we're softening again. This is huge level, in my personal opinion. Nvidia, there we are, 527. What do I have for price target? All right, still a short below 560. That's March 1st, a few days ago. Shorts are still working, below 560. All right, well, anyway, I said it was right here. This trend line is 512. Still being pressured, but this is really impressive. I'm sorry, I love Zoom. I know they had a fabulous guide. That is gross. This rejection candle, nasty. So they're coming back down to the 200. There's nothing that doesn't say they can bounce off the 200, but this is totally a tell that the risk is to the downside. This does not look supportive at all. Not for nothing. If this gets back inside the channel, I'm wrong. But right now, this form, EPS rejection, coming back down and taking out the lows here, I can see 300 quickly. Another short recommendation is Qualcomm is still en route to that 124. Yeah, Peloton, it was one of mine that I didn't put into my list. but there's same idea. Remember I said this was a gorgeous, if you kind of look at it, it looks like a head and shoulder, but it had too many side shoulders. Anyway, right here, left shoulder, it's kind of a messy head, and then right shoulder, boom. So 110 taken out is continuation short as well. Liking the support at 230 has to break. Remember my Microsoft 230 price target. Let me get that updated. Has been hit both weeks now, needs to close honestly below 226.72. It's a nice, you know where I think this is going? 30 bucks. We have more to the short side. I'm pretty convinced that we could have a nice move absolutely in volatility to shake out and really test the resolve of the bulls. Let's see what else we got here. We have to stick above 31.17. That doesn't look so strong, but that looks pretty good to 34. We got to move. I think it pulls back to 31 and then we launch. I really like this actually. This looks pretty powerful, potentially to 270, 274, 276 if it can get above. Value kind of quiet. Tesla sideways. Ugh, doesn't look good on a weekly. Looks like it wants to retest that 650. Distorted, unfortunately, intraday. Yeah. So it takes out this intraday. There we go. All right. So if you're into chasing Tesla, this is really, really clear. Working. The risk indicators showed XBI as a short literally on this day, and they have not changed since. One day they did. One day it fired long, and then the very next day it went short again. So some of these have been really good tells. QQQ, same thing. It triggered short and it has stayed except for one day, and then it went right back. Don't know it at all. It's a rocket sympathy. I think that's done. It's, what do you want? 80% in one day. Top out. I thought that would be the candle would top out, and the next week it did this. Fabulous Morningstar reversal, right? So we're down to 36. Now we've broken the 10-week. That puppy's coming in. I think the Fed is looking at bonds and going, we got to do something. I think that's macro is making the weather here. I don't like this look. This should have been a fabulous bounce play, right? We had a yield spike, and now we should have at least a bounce play, you know, into this 146, 149 area. We're not getting it. And you can tell by the look that we came back down to the 8-day and bounced. Here's a little gap fill. So I'm looking at the fixed income market. We get above, we're going higher. Big picture, I still think we're going higher. 10-year, I still think we're heading back to 2. I thought we'd have a bounce first. And until we get a really nice bounce in bonds, it's going to be tough, I think, for SPY to sell off. Macro to micro support. Oh, what did I since yesterday? I'm going to go over a few things. I know I did a lot this weekend, but okay. Sunday, I got busy. Saturday, Friday, I'm busy on this a lot, actually. Okay, yields rising. I'm gonna go from last week. I had a few points here that are all Fed related, And yes, there's also some some oil stuff. We'll go over a little macro here, and then I'm going to close early because I got like a lot to do this afternoon, and I think it's going to be very dull, honestly, until this afternoon. So, what do we have? What do we have here? ISM manufacturing survey. I've already talked about this. Wicked increase in prices coming. All 18 industries said so. 5-year looks headed higher. I thought we'd have a pause first. I thought we'd have a sizable bond bounce given the standard deviation move, and then we would head higher. This is copper gold. I absolutely don't think it's sustainable. I really, really, really don't. So I do see that coming back down, but we haven't tagged quite the target that I have in play, but we're almost there. And I will show you that in my intermarket. All right. Yes, this is Biden and the Saudis and what happens with oil. They're going to probably increase supply is my bet. OPEC meetings, the 4th and the 5th. All right. So this was something, where did I get this? I got this from someplace, not mine, clearly. Yields down here, SPX up here. When they start to rise, they come back down. So that was kind of big picture. SPAC euphoria, oil. Oh yeah. So that was PE, duh. In a normal market environment, PE declines, price earnings, when the 10-year yield rises. Over the last 60 years, there were only 3 occasions when we had that happen. I didn't finish this sentence. So when PE prices rise, we're outdone by the 10-year. And that's what I think is happening potentially as well. So rate of change worries me. I also have a chart that shows you the 10-year advance last week was the fastest ever. So the Fed is wide-eyed right now, taking a look at that. The market is repricing a stronger economy potentially and higher rates. And we're going to talk about that. Threshold of pain on the 5-year is 0.75. This is important. Yields rising to 0.75 might constitute a tightening in financial conditions. That's not good, right? Corporate loans and all that. For economies recovering from the pandemic, other things being equal. It could also spoil the debt refinancing party for companies and governments. It's early innings yet, but that's exactly what I'm seeing in this 5-year. Okay, I can type. This is the 0.75 area, right? We had a 1-day wonder and then it came back to the 8-day and now it looks like it wants to head higher. Well, if we do, that's going to send some more fears into fixed income and equity, especially the high flying growth companies. So that's one thing. And then if we add in any dollar strength, that's going to be an issue too. So just using UUP, we're kind of flatlined, but we're still staying above the 10-week, to be determined. China also has meetings this week. Oh, joy. So we've got OPEC, China, reflation story. It's early innings, early. I don't want to talk about that right now. We did that on Tuesday. This is bullish point. And I also shared with you the BlackRock sentiment, which is basically CTAs are still, long, and hedge funds are all in oil, and the bullish view post quote unquote taper tantrum, it really wasn't, but the point is it was the next best thing because bonds reacted so strongly, not since 1998, right? Or 2013. So it was a really big movement, and that's why it was just the taper tantrum talk. Anyway, confirmation right now that could be profit taking on long positions in Asian equities. So not a big deal, just kind of seasonal. And we could get more reflation trades into Easter, which right now, Goldman coming out, super cycle, Nomura, JP Morgan, they've all kind of reiterated this word, super cycle, super cycle. So yields are going higher and equities soften in that backdrop. So far, that is playing out, but without anything really, really shocking. So bank sees a little risk of deleveraging by risk parity funds, which is why I watch this RPRA with very, very sharp eyes, because this breaks, we head lower, then guess what? That's my tell that they're deleveraging more. And that's all I'm going to say about that. So I don't believe what they say. I believe what they do. All right. So the parallel declines in bond markets and equity markets represents a rise in cross asset volatility. And I've been saying for a few weeks now that I really believe that rate volatility is going to seep into equity volatility. And we've had that. I don't think it's done. But right now, the fact that we're correcting, in this chop zone, we have not fallen apart, although I think the tech space is in trouble. And I mean that technically there's risk. And I mean that also in regards to the macro background, higher yields are going to put a damper on some of this refinancing and repayment. So it slows it down, this hot fire flame kind of thing. All right, so then you got oil, right? Bob's narrative, which is that we have really outrun the fundamentals here as far as price is concerned. And we did pull back 7% from when I talked about this getting soft, but we have not pulled back in the reflation trades. This is the dollar. You know, you can go through and say we're an outlier ready to revert. At least that's what I say. But this could be months more. It's painful. It's painful waiting for this. But then when it happens, and then it really can happen in a big way, right? This is 2014 when China also, they did their little 2015 deval. And so we can see some moves. There's no question. And right now, China is also saying they want to deleverage. They don't like the speculation. They have rampant speculation that occurs on a regular basis in the real estate market, and they want to tap that down. Yeah, watching aggregate bonds, AGG, watching junk, JNK, watching HYG, because that's corporate credit. Really, really, that's important. More info from Bob that says fundamentally this price move does not support the oil price. Bob again, but he does still say always have tail risk on. But he's out of his bullish positions, which is really important because when he plays like 36% of his book. And he advises hedge funds. This is his thing. He just trades oil. So he's out of that, but he will still have long tail risk because you never can tell when that, can reappear. So reflation, I still think China has something to say about that as well. And if they have some worsening rate environment, I think we're going to see potential for risk assets to come down in that space. BlackRock, okay, that's a big thinking kind of insight. McElligott, duration risk is embedded across all markets. It's safe to say the vast majority of investors don't understand the link between their holdings of tech shares, secular growth favorites, and bonds. So we still have so much legacy positioning crowded into equities with heavy interest rate sensitivity. So that's why I populate the macro, because it forms, obviously, support for what I'm also posting in intermarket, right? My stock bond volatility ratio, my oil higher or pausing, thesis, that kind of stuff that's here. So what was mentioned just recently, this is all about VIX, ISM, consumer prices going up, China this week, OPEC this week. They're definitely always going to be bubble warnings, and they go on forever since the beginning of time. But the point is, I do agree that we've got this inflation adjusted yields maybe at levels where further gains may drive the S&P lower. And then you add in that China's top banking regulator said that they are worried about US and European markets, but more importantly, they are meeting to discuss their own deleveraging. So I've gone through and kind of put some stuff in here as it relates to macro themes. Short TLT, which by the way is a short gold call as well. Long commodities, this is Druckenmiller, by the way, 2021 themes, who I think, and there aren't a lot that I really like from macro, I really like him. I like him. So long commodities, he's got big XLK, short ARK. I don't know about that. To each their own. NASDAQ, I've already posted this. I think we get some pullback, and did the dollar talk on Tuesday and completely forgot this fabulous chart. I feel bad. That would have been really good. Anyway, watching dollar and US China won for sure, because they are tightly correlated with the 10-year. I mean, look at this. This is CNH inverted. Here's the US 10-year. See a similarity? Especially since Q1 2020. So I'm always looking for correlations. And nice reminder here as well, earnings yield premium on tech stocks versus the 10-year treasury yield. It has definitely breached 2.25 on February 19th, and we've been soft ever since. And this has been a consistent sell signal. So I am agreeing. I don't see any stress in the bond market in junk and HYG yet, but I'm looking for it. Bernard intonating they won't, have a problem with a kind of twist or a program or yield curve control specifically. Aussies already did that on Sunday night. And then here's the latest and the greatest in regards to that. So let's go look back at markets since that's kind of a overview. Right on support. This is important. We're only Wednesday morning. So here we're on support. We were here before. Remember November? And what happened? So we really, from August, this is important for me anyway, to get my market call for what comes next. From August 4th, and I remember very, very strongly saying tech is going to pull back and volatility will not act as a hedge. And volatility had run up with tech. In other words, folks were buying as calls were also going up, hot fire flames in tech. So when tech turned on the 4th, volatility fell a lot. So volatility fell, tech fell, and this risk parity didn't fall so much. But it did show me that they were clearly correcting and in time. And then what happened? Remember, you can look at any chart of big tech. It went sideways, with the exception of Google. Google did do really well. But the point is, this corrected right down to on a weekly, onto the 30. And then November 9th was the election and then the Pfizer vaccine, and boom. And this has been a really nice trade. And then I said at 24.20, we're at a 1618 fib retracement. Let's see what happens. Boom, we had a big pullback and then a bounce, lower high, boom, a little bit more of a weakness, but we didn't break the 10 until that week, which was last week, which I saw going lower because my stock bond volatility said we're going to have a little tag, boom, and we did. So this is gorgeous, right? But here's where we tagged and came right back in, which is here. Look on the daily. But we haven't gone up very much, and now we're weak again. So that's why I came up with, I still think we're choppy, and the Qs in particular are weak sauce, and maybe we can find a particular high flyer like Groupon on Monday and Rocket on Tuesday, and today I haven't seen anything. Oh, God, I'm sorry. I missed it completely. Duh. Why didn't anybody tell me? We talked about this one yesterday. And CPE just also triggered above 27.50. And CNTY is firmly above 8. Shipping is all of a sudden now coming back. Boeing is very nicely firm. Look at this. Cruise lines, agricultural inputs, lumber, GT taking off. That's gorgeous. Auto parts. So there's always a bull market somewhere. And Jonathan is telling me that MIK is being taken private.